Hello everyone, this is the 9th episode of my 2026 Portfolio Challenge series where I try to beat the market by testing 4 strategies that range from sensible to slightly unhinged. Each of these started out with 100k, and currently only one, the deep value, is beating the market. Here's the market. The rest appear to be on the uptrend, and I have a feeling that we'll be profitable on most of these by the end of March. Disclaimer, this is for entertainment and educational purposes only. I am not a financial advisor and this is not financial advice. This is all done on a paper trading account and these are all simulated trades with no real capital at risk. So today's itinerary is going to be pretty short. I'm going to go over the portfolio's performances, no changes, so this is going to be pretty quick and easy. Then I'm going to go over some of my watch list news and some of the global news that's going on. There's the war in Iran, mostly. Then I'm going to be talking about how Nvidia earnings went, my opinions on that, and then same with Celsius. And then I redid some of my Nike calculations, so I think I'll probably exit that. And finally, you guys will see, but more than likely I'll probably find a way to enter Nvidia this week. So we'll see how I do that. It's probably just going to be selling the Nike and replacing that with Nvidia, but we'll see if I need to adjust other things. And then finally, I just want to talk about Bitcoin, war, oil, gold, etc. So just a few of those things. So the 2026 main portfolio, again, this is basically my gut feelings, my value picks, and stocks with high IV so I can sell covered calls and cash secured puts on them. As you can see, almost nothing changed week to week. I did literally nothing on these this week. So this is all just minor changes in cash and cash from selling covered calls and some of the percent changes and the values of the stocks changed throughout the week, but nothing major happened. Again, nothing major happened. Most of these I've already exited. Celsius actually rose up quite significantly and Robinhood hasn't changed at all. But other than that, everything's roughly the same. And then the deep value portfolio, so this is just a pure forward PE play with some guardrails that I put up. No changes this week. I will look for an exit on Verizon this week because it reached its value here. So it's currently not undervalued. And then I'll have quite a lot of cash. So we'll see if I can find something else. But to be honest, this is supposed to be just mostly hands off. Again, here's the deep value portfolio. Currently, PayPal and PINs are losing a lot, and Verizon is currently our leader, and I'll probably exit that. And I've already exited MO last week. And the choice value, which is my value formula picks. This is all weighted by conviction, so I'm very bullish on Hood, Meta, Micron, and SanDisk. And Nike will be replaced. I had a lot of Nike just because I wanted the high IV. I believe this is 200 shares, so I'll be replacing this likely with Nvidia, which will also be a pretty high conviction play. And again, Robinhood is the big loser here, followed up by Adobe and then NVO and UNH, which I've already exited, along with Lulu. And Adobe I'm also pretty bullish on. I reran the numbers this week and they look like they should be going up pretty soon. They've got earnings actually this week, I think. So that's going to be interesting. And then the meme stock portfolio, Robinhood is a huge loser here. And GameStop, I made that in the first month. So the Nvidia earnings. So this was my preview. We had the Wall Street expected revenue of 65.71 billion. I expected 66.6, and the reported revenue was 68.13 billion. So that was a significant beat even from what I expected. And then they also gave pretty insane forward guidance. So that's what updated my numbers. Previously, my value formula put them at around 210 to 215, I believe. I like rounding up to 220 for them because I believe in the company. That was my previous projected price target. And now with the new numbers, so these are updated Wall Street estimates. You can see them here. These are all the updated Wall Street revenue estimates. And then these are all just, basically the same formula as the other ones. So what I like to do is I like to look out towards the end of the year, and this should be the end of the year quarter, and it's at 265. Now, do I believe that we'll reach this 265? Probably not, but I wouldn't put it past Nvidia because they're a pretty beast company. But certainly I believe that they can reach the 233, and at their current price of around 177, that's quite a significant upside with little downside risk in my opinion. Now, next up, I wanted to talk about Celsius. So the projected Wall Street revenue was 638. My expected revenue was 660, and they performed at 720. So this was actually a pretty significant beat. And then the Wall Street earnings, they also updated here. The Wall Street earnings also updated here. But to be honest, this still looks kind of low for me. And even with it being kind of low, it's still reaching 61. Yeah, 61 in 4 quarters and 56 by the end of the year, 57. So we'll see. I might leave them if the IV contracts a bit more than it is, because the IV is pretty high on them currently. Let me actually pull that up. Yeah, so you can see the IV is pretty high. It's at 60%, which if I put the cells at 57 for the week, that gives me almost 1% per week, which is roughly where I want to be when I do covered calls. So I will more than likely keep selling covered calls while the IV is nice and high. And then once it contracts a bit, or if it goes past 56, I'll just sell it unless new news comes out and these update again. So yeah, as you can see, I expected it to jump and it did jump. So I was pretty pleased with that. I almost exited actually at 58 when it reached that, but I wasn't paying attention. So it went up to 59 and then it dropped back down to 52-ish. Yeah, during earnings, you can see it jumped up to 59 and I just missed that entry, or that exit actually. So I ended up just not doing anything. I do think it'll slowly rise back up. We'll see. I'll probably just keep selling covered calls on it. And then Nike. So I reran the numbers after looking through my portfolio and realizing how big of an effect it was having on my portfolio. Now, I'm pretty break even on Nike in all my portfolios. So here Nike is negative $135, and in my main portfolio, Nike is negative $121. So I'm basically break even on that. So it's not like I missed out too much, but I was looking at it and there's basically no projected growth, basically 11% per year. And their forward IV or forward PE ratio is basically 11. So, I just don't see them growing too much, to be honest. So without a high IV, which they just started lacking, it's just not worth it to hold them and to sell covered calls on them anymore, because it's nowhere close to 1% at the 20 delta. And then finally, I wanted to talk a bit about some macro news. So war broke out between Iran and the US and Israel. It was a joint operation. And their supreme ruler, Khamenei, so he died basically in the first day. And so what effects do I think that'll have on the market? So one place that I like to look is Bitcoin, because Bitcoin is basically a measure of risk in this current day and age. And when the strike happened, you can see there was this huge drop from 65 all the way down to 62. This happened in 30 minutes, 45 minutes. And then it's slowly been rising back up. And so what I believe is happening is people kind of panicked, but the market did price it in. So people, sold the Bitcoin and then they realized, oh, wait, we actually do know now what's happening, because a lot of the risk off that was happening was because people were scared that there's going to be a war. But now that there is a war, there's more certainty. So I believe that this will actually just keep going up. I believe a Bitcoin recovery to the mid 70s, low 80s will happen. And I'm not a Bitcoin expert. This is just the measure of the risk. And so I believe the market will take on slightly more risk soon, especially with the lower mortgage rates. And then there's also gold, which is currently just flying. Yeah, gold is currently flying, which, so this is actually a measure of risk off, because people want to buy gold when they want to reduce risk. But with how gold's been moving, to be honest, this is more of a risk on play. So this is back up, but I don't expect that it'll hold it. I don't trade gold either, though. And then finally, the last one that I wanted to look at was crude oil futures, US oil. And you can see that it dropped and then it rose. This has to do with the Strait of Hormuz, but I don't think it's actually going to move much. Again, I am not an oil trader at all, but I don't expect this operation to last very long, and I don't expect the Strait of Hormuz to stay closed very long at all. So I see no reason for oil to go up, especially with the US actively trying to reduce the price of oil. So yeah, there's just no reason for oil to stay up. And that's about it for me. Thank you guys for watching. Have a good week, and I'll see you guys next week. Bye-bye.